come here, sit down, let's talk. In this video, I'm gonna show you guys how to build a monster dividend portfolio. Now, if you don't already have a brokerage, I'm gonna leave a link to Moo down in the description. You sign up, deposit $100, you could get up to 15 free stocks and have a 5.1 APY% cash sweep. So all the cash that's just sitting inside of your portfolio, you can earn interest on that along with getting paid dividends. So this is by far the best promotion that Moo has in a while. So you might want to click that link down in the description. Also, I'm gonna leave a link to Webull down in the description. You sign up, deposit $1 if you want to, and you can receive up to 12 free stocks. With those 12 free stocks, you can keep them inside the platform and decide to use it, or you can sell those free stocks and withdraw all of your money. Guys, it's literally free money. Now, I had to say that at the beginning of this video so we could get straight into the subject matter of building this monster dividend portfolio. If you want to learn how to do that, go ahead and hit that thumbs up button. It helps out this channel more than you could possibly imagine, right? So yeah, guys, after you pick up your Moo and your Weebulls with the link down in the description, I'm gonna also leave a link to my Mastering Dividends ebook down in the pinned comment section. If you check out that ebook and read it from beginning to end, you will learn everything you need to know about dividend investing just from that free ebook down below. You click that, you get the PDF, you'll learn everything you need to know about dividend investing, much more than I could tell you in this video alone. So if you guys want to learn everything you need to know about dividend investing, click that link down in the pinned comment section to get my free ebook, my PDF over Mastering Dividend. And it's also free, and you could go ahead and subscribe to the channel so you don't miss out on any future videos. Now, in this video, I've been investing into dividends for a while. My shirt right here say dividends are dope. I'm making money right now. Listen, I've been doing dividend investing for quite some time now, and there are a lot of dividend investors out there they're just getting started, and then they got to go through the low points and the high points, and they have this crazy, they're considering a monster dividend portfolio to be, oh, my portfolio is going to bring in a dividend yield of 10%. My portfolio is going to bring in a dividend yield of 11%. My monster portfolio is monster because it's bringing in such a high dividend yield. That's not a monster dividend portfolio. The portfolio I'm going to show you how to build today is monster because it's going to stand the test of time, and also it's going to bring you in hundreds of thousands of dollars in dividends every single year by the time you're ready to retire, guys. So if you want to build a correct monster dividend portfolio, make sure you watch this from beginning all the way to end. You can pause it, go get your pen, go get your pad, go get your iPad, your note paper, sticky notes, write it down, record it. Just play this video back and let me get some more views. But yeah, so let's just go ahead and dive straight into it. Now, the first thing that I would tell you, new investors about dividend investing is that if you don't know anything about dividend investing and that you want to grow your portfolio and you don't even know what dividends are, first of all, dividends is a form of payment that these companies pay back their investors, me and you, right? For saying, hey, thank you for investing inside of our company. Here's a little check. Now, what these companies are saying, it's by far the most passive form of income there is. I literally do nothing. I wake up and they putting money inside my account just like that, like once a week, sometimes twice a day, 3 times a day, money hitting my account. It's the most passive form of income there is if you're doing it right. Now, the other thing about dividend investing is that they have the dividend yield. Now, if every company pay out the same amount of money, with the higher the yield, the higher they pay you in dividends. So if they have a 13-14% dividend yield, you're gonna make a lot of money in dividends from this company. And if they have a lower dividend yield, like 0.5%, you're not gonna make a lot of money from dividends, but the company might grow more in the future, right? So new dividend investors, they're gonna see that high dividend yield, they're gonna go buy that stock, and then 5-10 years down the line, when they're not gonna be looking too good because it's not gonna stand the test of time, they're gonna end up losing money in the long run chasing high dividend yield. Now, if you know nothing about dividend investing, you just found out what dividends are, I highly suggest that you guys, while you're learning up on it, the easiest thing for you to do is to invest inside a high yield dividend ETF. One of the coolest ones on YouTube right now is SCHD. It's a dividend ETF that hold stocks that have a decent dividend yield inside their portfolio. You invest inside SCHD. They have a whole bunch of different companies inside their portfolio, so you're diverse across many different platforms, many different sectors, many different companies. You just invest inside that one ETF, and you guys can make some dividend income that way every single quarter. Now, I say quarter because there are different kind of dividend companies out there. There are monthly paying dividend stocks, And then they're quarterly paying dividend stocks. Monthly paying dividend stocks pay out their dividends every single month. I mean, every single month you're going to be receiving a check from that one company. Now, the quarterly paying dividend stocks, usually the blue chip style companies, they pay out their dividends every single quarter, 4 times a year, or once every 3 months. Now, we're going to be looking at both. Now, so they have monthly paying dividend stocks, quarterly paying dividend stocks, and there's many of them, many different ones in between. Now, looking at some of the quarterly paying dividend stocks, take notes, guys. There are many out there. There are some that are dividend kings and dividend aristocrats. Now, dividend aristocrats, companies that's inside the S&P 500, the top 500 companies in America, and they've increased their dividends every single year for the last 25 years, right? Amazing. They increase their dividends every single year for the last 25 years. And then there are dividend kings. Dividend kings are the same companies that's inside the S&P 500, but they increase their dividends every single year for the last 50 years. That means no matter through recession, depression, pandemic, anything like that, they was able to increase their dividends no matter how bad the economy was. They was able to increase their dividends. That's why a lot of people go and invest. They're building their monster dividend portfolio by just investing inside dividend kings. Is it safer? Yes, it's safer. But are you going to make as much money? Probably not make as much money, because they usually sometimes don't always have the best dividend yield. Now, the reason people do invest inside dividend kings and dividend aristocrats is because other companies out there are at risk of getting their dividends cut, removed completely, or cut in half, or cut by some percent, or just don't raise their dividend yield at all. And that's why people that go and chase these high paying dividend companies that have a 12% dividend yield, and then 2-3 years later, when you think you're doing well, they cut their dividends, and then they cut their dividends in half from 12% to 6%. You just lost half your income, buddy. You just lost half your income just because this company could not keep up with their dividends and they had to cut it. Now, the reason that investing to high yield dividends is kind of scary is because just imagine a company is paying back their investors so much money, they're unable to take their earnings and reinvest it back inside of their company in order to grow the company, right? Their company won't grow at all. Their stock is going to stay at the same price for the next 10, 15, 20 years because they can't grow their company because they're paying all of their money back to investors in dividends. Versus a company that has a lower dividend yield, they're only paying back their investors, hey, a little bit of a dividend yield, a little bit of change, and they're taking most of that money to reinvest it back into the company and grow their company by tenfold. Now you're making money from growth in that company, and you're making money from this company increasing their dividend yield by small percents every single year. So the smartest way to build a monster dividend portfolio is to look at the 10-year growth rate of the companies that you are very interested into putting inside of your dividend portfolio. So we're going to be looking at growth rate in this video, and then we're going to do a couple of examples, but let me explain some more dividends to you guys. There is a thing called real estate REITs. Real estate REITs, real estate investment trust companies, they invest inside the real estate sector, right? And by law, they have to pay back 90% of their taxable income in the form of dividends back to their investors. They usually have a high dividend yield, and that's why a lot of people are attracted to them, and they also pay out their dividends every single month. Most people run straight to them and say, I have a monster dividend portfolio. It's only 1 or 2 in there that I really trust, and that is the first one on this list, ticker symbol O. Realty Income. That is known as the monthly paying dividend stock. They're a dividend aristocrats. They are inside the S&P 500, and they increase their dividends every single year for the last 25 years. Another one that I like on this list that you guys are not going to consider a dividend stock is Apple, right? They have such a low dividend yield, probably like 0.5%, and people are going to say, no, that is not a dividend company. They have such a small percent, but Apple has increased their dividend growth by around 6 to 7. It was at 10% not too long ago for the last 10 years, I think last year, but they increased their 10-year growth rate by around like 8%. I'll look it up later on in this video. That is amazing to me because it's not too high, it's not too low, and they have an amazing growth rate in their dividends for the last couple of years. And the growth in Apple is completely insane. So on one hand, you got the real estate REIT that pays such a high dividend, but not going to have a lot of growth. And on the other hand, you have Apple that pays a low dividend. They pay dividend, but they pay a low dividend, but they're going to have high growth in the future. And a 0.5% of $1 trillion company is better than 10% of $1 billion company, because the percentage on a multi-trillion-dollar company is going to be completely amazing, especially when they continue to grow over time. So we're going to pull up some stocks in this video. We're going to look at their growth rate. Then we're going to show you an example of how you can make hundreds of thousands of dollars in dividend income from dividend investing. But before we pull that up, another big thing about dividend investing is that if you guys don't do this, you're screwed. You are screwed, and that is the compound interest effect. You want to reinvest your dividends back into the company. Why would you not want to reinvest your dividends back into a company that you already trust, right? I'm going to show you guys in this video that if you invest $10,000 or one-time investments of $10,000 inside a company and reinvest your dividends versus not reinvesting your dividends, a one-time investment of $50,000 and a one-time investment of $100,000, reinvesting your dividends and not reinvesting your dividends, on how much money that you could be making in the future, from hundreds of thousands of dollars to not so much money that you could live off of in the future. So let's go ahead and pull up a couple of stocks, and I can show you guys how you can find these dividend growth rates, dividend yields, things like that, in order for you to start to build your own dividend, your monster dividend portfolio. All right, here we are on Seeking Alpha, ticker symbol MO, Altria Group, right there, $43.32. Let's just scroll down. Now, Altria, 54 years, they're inside the SP 500. So what did that make them, guys? They make them dividend kings. They've been increasing their dividends every single year for the last 54 years. They have an annual payout of $3.92 per share and a high, amazing dividend yield of 8.99%. Now that is kind of high, but they've also still been able to increase their dividends every single year for the last 54 years. So are they at risk of getting their dividends cut? They could be at risk of getting their dividends cuts, but let's take a look at another one, Apple, right quick, AAPL. And then I'm going to show you guys the dividend growth rate. So Apple is at $170. They're recording this video. They've been increasing their dividends every single year for the last 10 years. And they have a dividend yield of, like I said, 0.5%. Now, are they at risk of getting their dividends cut? Probably no time soon, right? So let's look at the dividend growth right here. And we want to look at the, there you go, growth rate over the last 10 years. And Apple is at 8.22%. Anything above like 7, 6.5 is pretty good, but at 8.22 is amazing. Once you get to around the 10, that is something that you want to do more research on to really add to your portfolio, because the growth, if they continue up the 10-year growth every single decade for the next 3 decades of 10% growth rate, those dividends is going to add up to where you could completely retire and do absolutely nothing and receive those dividend payments and live off of that. So we did look at Apple. Let's pull back up MO, Altria Group. There it goes, the 10-year growth rate for MO. 7.5%, not bad. I mentioned ticker symbol O is probably not going to be as high because they're real estate REIT. 10-year growth 3.81%. It's not the best. IBM is a pretty good one that I like. IBM have a growth rate over the last 10 years of 6.3%, a little lower than what I expected, but it's not bad. Microsoft, MSFT. There you go, Microsoft right there has a 10.86% dividend growth rate over the last 10 years. Amazing. That's the double digits that we was looking for. We looked at Apple. Let's look at Broadcom, which is what, AVGO. Now Broadcom, once we type that in, they have over the last 10 years, they have a 35.28% dividend growth rate. So guys, when you're building out your dividend portfolio, your monster dividend portfolio, don't always just, let's take a look at their dividend scorecard. There it goes. They've been increasing their dividends for the last 13 years, and they have a dividend yield of 1.58%. So just because they have a low percent, don't mean that they're going to increase it over time. And especially over the last 5 years, the growth rate of a 17.49%, which is pretty good. So these companies can increase it over time. You want to look at the past statistics to kind of project towards their future statistics. And you don't want to invest into companies like QYLD that have a very high dividend yield of 11.5% with a 0-year growth rate with a negative 0.76 growth rate. And a lot of people are investing inside QYLD every single day. I used to do it. I made a video about that and how I got in and got out alive and actually made money from it. But with QYLD, they have a negative growth rate, 0 years growth, but they have a high dividend yield. And people are building these monster dividend portfolios with high dividend stocks in there that pay out their dividends every single month. But in the long run, they're gonna be in trouble for it. So let's take a quick look. Let's say we had $10,000, right? There we go, from 2000 to 2024, a one-time investment of $10,000 We're going to reinvest our dividends into ticker symbol O, which is the monthly paying dividend real estate REIT, Apple, and MO, right? So this is us investing a one-time payment back in 2000, $10,000 into these 3 different companies. We're going to hit analyze portfolio. And there it goes right there with just one-time investment, $200,000, $2.2 million. Of course, we all know Apple was going to go crazy, and $300,000. Let's see how much we'll be bringing in dividends. There you go. In 2023, with realty income, you'll have $11,000 every single year. Apple, you'll have $12,000 every single year. In the Altria Group, you'll have $27,000 every single year. Yes, it's not enough to live off of yet, but let's just say, how much do you need to invest? Let's say we invested $50,000 on one-time payment of $50,000 in hit analyze portfolio. Remember, we are reinvesting our dividends. Let's scroll down. We have $1 million in each, $11 million in Apple, $1.6 million in Altria Group. And we scroll down to 2023. Now we're bringing in $56,000 in realty income. We could definitely live off of that comfortably, especially if we move to Mexico. We can live like a king out there, right? So we have $56,000 in realty income. We'll be bringing in $60,000 in Apple. Remember, Apple only pays a 0.5% dividend yield, right? Oh, Apple's not this dividend stock. Apple's not a dividend stock. Well, they outperform realty income, a monthly paying dividend stock, the monthly paying dividend stock. They outperformed them, right, with $60,000. And with Altria Group, you'll be bringing in $137,000. That's crazy. Now, let's say if we don't reinvest our dividends. Well, first, let's say what happens if we invest $100,000. All right, so if we invest $100,000, analyze portfolio, Apple's gonna be dumb. I already know it's gonna be dumb. $22 million, $2 million, and $3 million with ticker symbol MO. And if we go out to 2023, realty income, you have $113,000 in dividend income, doing nothing at all. Apple, you'll have $121,000, and Altria Group, you'll have $274,000 with a one-time investment. With a one-time investment of $100,000. Now I know you guys are saying that's a lot of money. Let me show you guys this very simple trick. But what happens if we don't reinvest our dividends? Let me show you. All right, so if we don't reinvest our dividends, oh man, see that? Only $500,000, $189,000, and $18 million. And then our dividend income would be completely trashed. $30K, $100,000 from Apple, and 16 from Altria Group. So we always want to reinvest our dividends, and that's with $100,000. So let's just say we are going to reinvest our dividends, and we only started off with $50,000. But now, right, we're cutting that $100,000 out. We started off with $50,000, but we're going to invest $20 every single day, or $100 a week, or that's $400 every single month. Then we're going to hit analyze portfolio. And there you go. You have 1.6 million, 26 million, and 2 million. And you're still going to be bringing in a crazy dumb amount, right? $89,000, $146,000 from Apple, and then $202,000 from Altria Group. And that's just from 50K and reinvesting $400 a month. But let's just say if we started off with 10K, will we be comfortable? 10K usually it's not going to get it done, just a one-time investment. But we are reinvesting. With Apple, you'll have 17 million, almost a million with ticker symbol O, and Altria you have 1.1 million. And with dividends, you'll have you start off with a one-time investment of $10,000, and then you invest $20 every single day or $400 a month. You will be able to retire very comfortably with 44K, 97K, and 92K. And look at that, Apple outperformed both of those high dividend paying stocks with $97,000 in dividends from a company that's not a dividend paying stock, because they have such an amazing dividend growth rate. And there we go, dreamers. That is a little trick that you guys can use to build a monster dividend portfolio. Don't go crazy looking for the high dividend yields. Oh, I need high dividend yields. Those are going to get cut. And then they have a negative growth rate. I could have showed you a whole bunch of examples of companies that had their dividend cut, or a negative dividend growth rate, or just because they have a high dividend yield. A lot of people are running that monster dividend portfolio. No, these that have a good growth rate, that don't have a high dividend yield to where they can actually grow their company, is going to stand the test of time. What I always say is that we are investing in companies that we absolutely love, that just so happen to pay dividends. We're not going to invest inside a company just because they pay dividends. That's not the number one reason. We invest inside a company that we love, that just so happen to pay dividends, so it can stand the test of time and we can make money in the long run and also retire from dividends by doing absolutely nothing. Go ahead and hit that thumbs up button if you made it to this video. Let's try to get it to 1,000 likes. If we can get 1,000 likes, that would be completely insane. Hit the subscribe button. That helps out this channel more than you can even imagine. Also, let me know down in the comment section, are you already building out your dividend portfolio? What's the most you ever made in 1 month from your dividends? I'd like to check that out down in the description as well, because I'm going to do an update video on my monthly income from dividends. So make sure you subscribe to the channel so you don't miss out on that one. Guys, don't forget to pick up your free stocks down in the description to Moo and to Weeble. Pick up free stocks. That's an easy way to get started. If you guys want to learn more about dividend investing, I'm going to leave a link to my free ebook down in the comment section. But other than that, guys, thank you for watching. I'm Zeke, bringing you the Dream Green Show. I'm out. Peace.